Yeah, so this is Ken with Jeff and Chanel on November 6th, and we're going to talk about U.S. election strategy and tactics. This is really going to be some scenario planning, I think, for a uh, once in a very great while um, critical state. So this is how strategy, operations, and tactics come together at a particular point in time, and we're going to see if we can think our way through a strategy that allows us to frame what's special about this particular event. So strategy isn't always just visions of end states dancing through our heads. It's also, in some cases, taking a very narrowly defined problem and working our way through it. So there's that. Um, so I'm noticing that Jeff has some beautiful handwritten notes here, and I was just talking about the power that I find in handwritten notes as opposed to PowerPoints. And I've been thinking about it because I'm actually writing a paper on this that talks about constructive learning, or the construction school of learning, in which learning is created, it is made through mental manipulation and visualization, and it creates learning that lasts. And our observation was that when you handwrite things or whiteboard them and use color, there is a sense of storytelling that is involved, and the narrative unfolds, and that aligns with how our brains are wired to retain important information. So um, the wise men in the tribe, or the storytellers, or the oral histories have a long and uh, vigorous presence in the way that we preserve knowledge from generation to generation. But then when you get to, if you put it in PowerPoint, we're saying, yeah, it would be really sterile, it would be hard to put it together. And I think what happens is, when I show slides in the classroom, whether this is in trading workshops or at the college, each time you start a new slide, you have disconnected with the previous story that was built up in their head, and you're saying, okay, set all that aside, start with a clean plate. Now here's what this whole jumbled idea looks like all in one big gulp, and now I want to try to use words to help you create a mental model of what's going on in this slide so that we can get to the actual content. And typically our slides are so complex that you can't hold all that in your head, and at some point it just overflows, stack overflow. Whereas if you tell a story through a whiteboard and it evolves on the page, you've given some scaffolding that allows the narrative part of our brain to really work. And so we speak at 100 words a minute, but we listen at 500 words a minute. And that excess capacity is us playing with the story and trying things on and building the structure as it's coming through in words and pictures, and trying different alternatives. And it creates an emotional, elevated state that creates mental conditions where learning can last. And so I notice in my own teaching now that a lot of times I just start with a blank screen and then build a storyboard. And when I find myself drawing the same pictures over and over again, ultimately I turn that into an end state slide that's easier to read or whatever, and which I can tell a story to. But even then, even when I've refined it that much, and you end up with this artifact at the end, it can be complicated or sterile. It still has to be done in a way that evokes the story behind it. And I think when you see art that really resonates with you, there's something about it that draws your attention to a place, and your brain starts creating a narrative. And as your eyes follow the artist's path through the picture, you gain a story, and you're adding meaning to it. And then so you can be lost in time and space as you start speaking with the artist through the medium of his work. And so that's what I think happens with handwritten notes. It certainly helps the creator of it express what they're seeing and feeling and thinking on the inside. And so I'm always excited when I see Jeff's stuff because even his structured work is so compelling that I'm going to enjoy this one a lot, I think. So that's what I want to say about that. So now remind me to talk you through the integrated chain trading when we're done with this, because whatever strategy we come up with, I'm going to argue that we want to use that hybrid frog into OWL/P1F as a way to get the first couple cycles of trading done. And I did a sketch which I turned into a PowerPoint this past weekend that I want to make sure you guys hear, because I think that's going to be key to implementing whatever we talk through. Promise?
Yeah. Promise. Thank you, Ken.
Okay. Well then, Jeff, not so much me and now more you. What do you think?
All right. So I guess Sol and I were talking it through on the weekend, and we've talked about it for a little while, but we hadn't really fully thought it through. And so yesterday we were sort of brainstorming and sort of wrote down what we were thinking. How can we take advantage of this presidential election as a volatility event, where we know we should be expecting outsized range and big potential opportunity. And we want to be able to try to take advantage of it. And this is kind of, having at least enough experience to have traded some elections before, the UK election specifically, remember. I think we did quite well on that. But that we may have just been
lucky,
fortunate. Yeah, and I think it was kind of, realistically, I think we probably took on too much risk, not fully remembering it all in hindsight. But also, we went through the Brexit sort of thing recently as well, so that's sort of fresh in the mind in June.
Yep.
And we didn't even trade that event, and so and then looking back on it afterwards, I was kind of like, oh man, we should have traded that. But then you look a little bit closer, and then I talked to some of the other guys that I know who trade, frequently, and most of them didn't do very well at all, or they got lucky, and then when they got lucky, they gave it all back because they just got carried away with how well they did, and then they tried to keep going. And
the recency bias. Yep. They attribute success to their judgment and insight and directional analysis, and they think that's going to continue. Whereas when you have these sharp waves that occur, it's like a big rock in a small pond. It creates this first big wave, very clear to see, and then it starts this diminishing set of waves. And then the harder and harder you work at it, the more and more you're trying to get out of less and less volatility as the wave is declining in front of you. So you try harder instead of trying less.
That certainly rings a bell. Because you get so excited by the big moves at first, and then you're kind of in the mode of trying to trade in that way, but actually those ripples are deteriorating, like you talked about, right?
Yep. The guys with the big money that made that move have already done what they're going to do, and now you're just getting echoes.
Yeah, and actually, in the case of Brexit, it was, because the result was unexpected, I think, across the board, it was a much bigger reaction than people sort of really thought about. And,
I think the people who were engineering their hedges to that were disconnected with the popular voters, that they could not imagine that these country bumpkins would actually do something that in the short run is bad for institutional money. They confused themselves with the good of the nation. And so that's what I think happened there. So they're in the position to be surprised. And because of their very nature, they're not able to adopt a different explanation. They just try to do what they do, only harder. And then that just digs the hole deeper, I think. So a certain lack of humility that comes with the personality that enjoys individual trading and sees it as a competition and has ego tied to it, finds it especially hard to change their mind, to have a different opinion until it's beaten out of them, by leverage. So I think that's what's going on.
Yeah. And so, we've reviewed some of the charts from Brexit and to what's happened just from that point of view. And that was a different one because it was such a bigger reaction than our normal measures of volatility. As in, I think it's not on your sheet there that I got up, but I just did a quick other sort of numbers I put together. So it did 8 range stats that night.
Yeah.
Yeah, that's one of those ones where it's just a runaway. Whereas compared to the last 2 presidential elections, so 2008 and 2012, 2008 we were in the middle of the credit crunch, so all the volatility numbers like frog boxes and stuff was already quite high, and so we only did like a 0.6 of a range stat on the day following the election, which seems to be when stuff happens. And then in 2012 we did about 2 range stats on the day after the election. So. That's more of a.
Well, by 2012, that longer-term blip in volatility had already decayed pretty much.
Exactly.
And so it was still twice as high as it was prior to 2008, but it felt like it was normal. And so it's not, you're not trying to shout over a crowd like it was in maybe 2008 or 9.
Yeah, and so I guess if I try to place that where we are today, I would put our current sort of volatility more in the measures of normal. I don't know if you'd agree with that.
Well, I would say even on the lower end of normal.
Yeah.
And I'm going to try to say why I believe that. Let's see. Now, hold on.
So we've had, if you look at what happened this week, we've had a bit of a, we've had a sell-off as I think uncertainty takes hold over what the outcome's going to be.
Yeah, here's why I would say we're at the lower end of normal. If this chart number 6, standard deviation of price of the last 30 days compared to the last 180 days, right? So we're down here. We've been down here at the red line for 60 days, and the last 60 or 90 days have been historically sideways quiet channelish for the S&P, and just a remarkable level of no price action at all. And so, so by that measure, and then also by this measure, the S&P volatility, just using ATR divided by price compared to the last 180 days, it just bottomed out here about 6 or 7 days ago, and the same little spike that you see on chart 6 is the breakdown from this long sideways channel and this corresponds with the FBI announcement, Comey's announcement that, hey, we're going to reopen the investigation. And now suddenly that created a real possibility that Trump could actually become the president. And so the support level around 211 in the S&P that is held for the longest time has just shattered. And so now we got a second leg down. Well, that creates a potential of a really big spiky move on Tuesday, because we are at long-term and intermediate-term very quiet levels of relative volatility. So that's what I think is happening there. So that I think that we are more like your 2012 model than we are the 2009 noisy room. It has been a whisper election. Like, nobody is enthusiastic about either one of those nitwits becoming president. Nobody with real money, anyway. And so everybody has been just marking time, not taking big positions or directional moves, because there's a sense that their policies are going to be so different that somebody's going to become a big winner, somebody's going to become a big loser. You don't know if it was going to be a carryover from who was winning, or whether it's going to be a radical shift in who gets the public graft. And so that's why I think the last 90 days have been so abnormally sideways. And now, because everybody was pretty sure it was going to be Clinton, and with a puncher's chance for Trump, now suddenly it's not unrealistic that he could win, and now everybody's peeing their pants and trying to get out of positions. Even in even in indexes that were winning. So for me, I saw this coming with EWZ a couple weeks ago, that it had had such an extraordinary move that even that was overheated, and that may no longer be just a safe haven, that this could be a change in the view about equities worldwide. And so why not start cashing in EWZ? So even though Brazil and Latin America have had a really good run this year, even they are starting to suffer. So I think this is the classic definition now of a critical state, because you have long-term uncertainty. Now there's real short-term uncertainty, and that's why I think this is you're hitting this at the right time. So back over to you.
Yeah. Okay. So so we know that we're expecting increased volatility, certainly based on what you just said there, and so that kind of comes down to how much extra volatility should we perhaps account for when we're doing things like sizing for position sizing using I-stops. We tend to use a frog box. Someone's been using 1.5 recently, and we're aware that that's big in normal terms.
And you've been using 2 on event space.
Yeah, and so I think you've seen some of the stuff I've done, based on earnings targets with hybrid frogs, and even just creating earnings targets throughout the day. And my sort of rough conclusion is 1 frog box tends to not be big enough as a stop for earnings days. It probably ought to be closer to 2.
For position sizing stop or execution stop?
I don't know, for position sizing stop. And the execution sizing stops is based on based on the chart.
Here's the first coaching point that I would make on that, and that is, in my opinion, you are better off from an execution standpoint of maintaining your standard position sizing box, and then just reduce the dollars per trade at risk. So keep your same technique, but just drop the dollars at risk, so that you are trading the way you have become accustomed to trading.
Okay.
And then without trying to take on new techniques in the middle of the championship game. Just take less actual dollars at risk. So for me, that would take the form of, instead of increasing my position sizing stop from 1 frog box to 2, I would keep it at 1 frog box, but I would reduce the dollars at risk per trade from 400 to 200. Has exactly the same net effect, but it has the added advantage that in the moment, a 0.3 is still the same size. It's still the same size of a move. A 0.3 and a 0.5 and a 2.0, it's the same size of a move. Whereas if I had doubled so I'm tapping into all of the proficiency that I've developed in that particular style traded under normal conditions. So I want to keep my battle drill. But in order to account for the bigger moves overwhelming the frog box, well, I'll just use a smaller dollars but risk. I still should not take more than a 1-hour loss, but I don't have to. I know I know how bad that feels, or I'm used to executing in a standard way. I think that's the way I would approach it. In that way, you're not doing extra work thinking about the special way you're trading at the critical moment. Now, in fact, you can actually rely on all of the hard-earned craftsmanship that you've built up through daily trading. So
that makes sense.
That'd be the first point to make.
In the situation where, let's say, if everything goes a little bit nuts, and so, for example, if we're taking like a normal trade, and you can just tell that, then this is just way too tight of a stop now, just based on recent price action, would you adjust at that point or just continue?
The next thing I would do is I might compare, especially now, I would maybe compare short-term frog box to long-term frog box. And that way you kind of get a normalized, and I would take the bigger of either one of those. This is still a spreadsheet in progress or in process right here, but let me see if I can get this. Yeah, so let's see here. Yeah, there's still a lot of errors in this, but on the critical one, we're in good shape. So
Remind me how far back you're looking for long term?
900 days, 5 years. So just some numbers to keep in mind here. This one I'm looking at the long-term. Oh, I'm sorry, the long-term frog. This is the one I want. View selection. So we're going to look at VXX. His long-term frog box is essentially $1 right now.
Okay.
And the let's see, where's the SD? So if you look over this column in P and Q, the biggest one-day movies made in the last 5 years is 27%. The smallest one was about 1%.
Yeah.
His long-term frog box SD percentage is 2.59. So we have to, when you're looking back 900 days, because price itself has varied so much, to compute the long-term frog box, you got to turn each day's range into a range percentage, find the average and standard deviation of the percentage, then reconvert that back to a percentage times today's price to come up with the long-term frog box. So that's essentially what we did here. So the if you're using VXX, you probably want to write this number down. So right now the long-term frog box is $1, and his percentage is 2.5%, right? And the range stat is 2.64. So that's really got a frog quality number is something like 2.5. The long-term pinch box on him for hybrid frog is 70 cents. Now, when I go back and now look at, let me find VIX here. Zoom to selection.
I think it went by. Oh no, there it is.
Yeah. So now his short-term frog box is 0.74. Well, this is pretty timely because, we asked a question earlier, where is the volatility regime now compared to long-term? And we said then based on price action, how narrow those last 90 days have been, our spider sense said, it's been very quiet. And then we looked at SD divided by price and all that, and it was near historical lows for the last 6 months. Well, here's another one compared to 5 years then. So now the SD is 0.74, and the pinch box is 50 cents. So that's 25, actually no, that's 25% tighter than the long-term historical norm. So right away, I would just tell you that maybe the right answer is to use $1 for VIX.
That makes sense. Actually,
let me come back to this one. Maybe it's better to use the $1 for the long-term frog box for position sizing, and then you are less likely to get surprised by just how big that move is. So I think that's a case, and then increasing. So you would be increasing the frog box size now for position size by 33%, because you're going from 75 to $1. So you're increasing it by 25 cents on 75. So that's an increase in frog box size by a third. That would reduce your position size by a third, but still not really violate your sense um, of proficiency from trading in that way. It's not a huge difference, you know. And plus, we've seen that after a quiet period, having 2 or 3 days of volatility, it wouldn't be unusual for your frog box short term to get that big. So you're not really changing your basic familiarity with the instrument. So I think I would support that idea of going to by comparing the short-term frog box to the long-term frog box. We're seeing that it's a difference between 0.74 versus 0.98, and then I would say therefore use a dollar if you're trading BXX. And then since that's sort of a proxy for volatility everywhere, instead of running all the numbers on everything, I would probably just increase the frog box size by 1/3 on all your targets, and I think that you're probably in the right ballpark. If you were using, I'm going to send you the spreadsheet here for long-term frog ranges and whatnot. And so, so if it turns out if your targets will fit inside that structure, you could actually find the real numbers pretty quickly. And it looks like you're doing. The only things I don't think you can get easily from Yahoo is those currencies, but certainly treasuries, gold, oil. Brazil or Mexico itself, I would tell you, is pretty strongly correlated to EWW anyway, and EWW is a frog champion. So I will tell you that in addition to the currency, you may actually find that the country ETF trades more smoothly than the currencies. And the reason for that is that the currency guys are going to be really ready and able to jump that thing around. Whereas there's a secondary bleed over effect to EWW. I would really be surprised that there was millions of people trying to tactically time the Mexican country ETF. Whereas the Mexican peso, I think they would be. So I think you're likely to see volatile moves, but smoother moves in EWW. That would be my spider sense on that one. EWW as a trading target, in addition to Mex peso.
Cool.
So that's sort of my sensing on that one. In the same way that when we look in the when I compare precious metal ETFs to the underlying futures contract, a lot of times you'll see silver and gold, the ETF, trading low volume in a narrow band, and then all of a sudden you get this big spike. What that means is that the ETF traders with very low volume are just moving the price in between the bid and the ask on the futures contract, which is now large because of the increased margin requirements, that the contract isn't even moving. They're not even trading it. It's just waiting for somebody to hit it. And so all of this little buzz in between bid and ask is what's going on in silver and gold, which makes a nice channel trade, by the way.
Right. Okay.
So in the same way that you can actually get smoother trades in the ETFs, because you don't get the big bounces that you find or the spikes that you get in the futures contract, that I think EWW as a target is legit there too. And so it wouldn't surprise me that silver, gold, and therefore ZSL, I'm trying to remember the double silver long. Well, silver wheaten are legit targets now, as people try to, and that I think is the hedge away from equities. And you've already seen some of that move back in silver already.
Yeah. Okay.
So there's some goodness there. All right, man, back over to you.
No, cool. That's helpful, actually. Um, okay, so just down the assumption side there, what we've been talking through from things I've read, it kind of seems like it's if Hillary wins, and things kind of stay as people tend to be. It's kind of like the status quo remains, and she does incremental change. Whereas if Trump wins, nobody knows what's going to happen. Therefore, there's uncertainty. Therefore,
yeah, he's uncertainty in every possible time frame. Is he really going to try to do something like this 100-day contract on America, or was that just some bullshit? And then and the other thing is, nobody has a clue right now about what happens in the House and the Senate, because it's upsetting all those apple carts. So in other election cycles, there's been sort of pretty good precision on how the legislative elections were going to shake out, and then whether or not you could count on a guy having or not having an electoral majority and to pass his laws. Well, that's up in the air, and you will. I am predicting you'll see a historical level of election challenges, where more than ever, where guys are contesting the results, and so there's a real chance that the legislative bodies are not going to have clear conclusions about who's the majority party until January or February. So there's this lame duck session now. How much is actually going to get done, and what are the tactics chosen? So I don't think anybody knows what's going to happen in there. So yeah, the expecting increased volatility. I'm 100% with you on that one.
Yeah,
in every time frame.
And so just that underneath that Trump wins there, we're thinking equity markets down, dollar up, treasuries up, gold.
Yeah.
Peso down, Swiss franc up, and yen up. Do you sort of agree that makes a bit of sense? I've skipped oil because I'm not quite sure what it means for oil.
Yeah, I think oil is so large and keyed to long-term economics so well that I think there's a natural dampener on that. I don't think you get runaway moves in oil simply because that's everybody says it doesn't really matter who the president is anyway. You got economic long-term policy positions and macroeconomics driving all of that. And so the actual ability of that nitwit to affect the price of oil can only come from if he did something stupid in foreign policy in the Middle East that changed the balance of power, that threatened the flow of oil. But there's no direct economic policy change that he could make that would affect the economics of oil itself. So at most, I think I would lean towards price of oil going down, because one of his earliest policy pronouncements was unleashing the hounds on U.S. domestic energy production as part of his first 100 days. And so that's actually kind of an easy one. Hey, the Alaskan pipeline and fucking removing restrictions on coal and rolling back some of the inhibitions on U.S. domestic energy causes an implied increase in supply, which drives price down. So I think that means that the swing trading in oil is still legit, and I would just use the RLCF framework and the Baby Dragon and the RL10 on daily and weekly charts to find out what those and trust. I would trust like the owl and pockets on oil in swing term, and that way you have a wide enough stop that you don't really have to change your style of trading. I think I would do that rather than short term. I mean, I just think that oil is swingy enough that I think you can do that on the swing trades.
Okay, so it sounds to me if we're specifically looking to take advantage of intraday opportunity with this sort of idea. So I think we'll just leave oil off the target list.
Yeah. Yeah, I just think I think the normal swing trade approach for oil is the right way to play it, and you might just get a bigger move, a 1.5 times the normal size of moves, and maybe the duration, rather than trying to tactically time. I think you're much better off trying to tactically time the peso in Mexico, and I like Japan and the Swiss franc idea too, as flight to quality, because you don't know whether the money is going to go towards the Brazilian real or the euro, but the Swiss franc and the Japan are both kind of large enough to absorb short-term big moves that it can handle the size. So,
okay.
Treasuries has just really got me in a man. I understand the flight to quality piece, but they have been hit here lately really bad. And then so some folks have said, well, it's because of Fed policy and all that. But man, the one thing I can say about Treasuries here is that if it's going to be a flight to quality, then the only explanation I have for this kind of price action is that the big money put downward selling pressure on this thing from 140 essentially to 130 so that they could buy a ton of inventory in order to sell a rebound up here to 140. You know, the posture is in place for a long, orderly selling into a flight to quality. So they're essentially, that's guys who suppress the price in order to sell to the fourth mouse. The fourth mouse, I think, on this one is the guy who waits to actually see the outcome and then starts going to treasuries to get out of equities until that whole thing calms down. So maybe that's how I interpret that. That there's about an 8% move available on treasury swing trades is my judgment. 8% move. And this again, this is more of a swing trade, but I think because of treasuries and the way they trade intraday, I think you can actually also frame that as an intraday move, and then core and turbo in the next week. Core and turbo swing and day trade combo. So I think there's from 132 to about 140. That's my hypothesis there, and it's close enough to the bottom of that stack that if that's wrong, you can do stop and reverse. So that's okay. So that's I think that's everything on your list there.
Yeah. So what Saul and I have been talking about really is that if you could flick back to the full sheet there for a second, it's just behind your notepad screen.
Yep.
Separating out we kind of see the whole event in 3 sessions in a way, or really 2 sessions, sort of like in the intraday, and then session 3 being well, what happens afterwards, more like a longer term swing almost the next few days. But session 1 being early morning on the Wednesday U.S. time, as all the results actually start coming out and it becomes more. Yeah,
and it's the last time to hedge by the Euros as they start watching, because maybe they're waiting to see, but they want to use the currencies to position themselves for the day after the election. I would agree with that.
Yeah. And so what we've been talking about is sort of setting ourselves up for 2 sessions. One of them, which is our standard morning session here. It's like 2 a.m. Eastern. It's like 7 a.m. over here.
Yep.
But we could do our normal thing, but we just want to be prepared with what targets we're going to use, what systems and time frames to look at, and then try to be aware of when news may appear, and whether it's worthwhile to keep an eye on the news as it drips out, or whether the chart's going to tell us and we don't need to bother with paying attention to the news.
Yeah.
So, but before we get into that, just two sort of main sessions. That first one being the European sort of normal morning, which is the U.S. overnight as results are released, and then question 2 being once the U.S. markets open, well, now what? You know.
Yep.
And what Sol and I have in mind is, well, let's pick targets that we think, we can. Number one, we're familiar with. Number two, we've got enough span of control to cover, and that we can sort of split between the two of us for each of those options, and then work out what systems we're gonna use. And if there's anything different that we do over these things, because some of these things, the 1 and the 3 minutes, are a little bit too jumpy, and you look at the 10s and you're like, okay, that might have been better on the big days. And I know I'm going to be happy because I'm just going to think if I get in a position and I get nicely up, my instinct's going to be to close it out.
Yeah, the other thing I would say too is on the green targets, the Dow and the Russell is essentially the same trade.
Yeah.
Only one is 2.5 times as volatile. Gets the earlier move. And so I would have you think about, you could also use one. I think the Russell goes faster than the Dow is likely to go because you'll get more traders on it. And then the follow through with size is the Dow because it's moving actual real things, 30 real big things. And once that thing starts going, it tends to go, right? So what I would say is get the initial directionality of the Russell, and then when you see the Dow coming online to go that same direction, then pick your preferred vehicle of choice and really concentrate on that. But it's almost like a fast and slow crossover, or a breakout trade. Alert with the Russell, follow through on the Dow. Yeah, and then when the Dow is over and starts to stabilize, then all that's left in the Russell is just the traders trying to trade. There's no holders that are also trying to move it. When they're both going together, you have a double plus turbo. Hey, both the long-term holders represented by the Dow and the short-term traders represented by the Russell are in agreement that both those trends are running in the same direction. And then one of those two gets done first. Hey, the traders are out of money. They're all in. You got no more leverage left. Or the Dow guys all made the repositionings that they had to make in order to account for the new ideas. And that's why I think XLV is interesting in there too, because to me, if it's Trump, they actually do better because there's an implied relief from Obamacare that's likely to benefit them as we go to more private solutions. But if it's Clinton, then they become obvious targets to expand the Obama legacy of torturing healthcare as a sector. So I like XLV on there for that reason too. And then the XIV VIX pair I think is likely to be divergent from the big indexes. Like in when it's just a normal day, there's a strong correlation between volatility and the indexes. But I think this one, I would not make that assumption because I think there's going to be so much money being slung around on box trade in butterfly trades, where you're putting a tight box around price and then expecting volatility in either direction. I think there's going to be so many games being played on that one that the correlation to the underlying index moves is likely to be less than usual. So yeah. I wouldn't take volatility signals as a front runner for directional changes in the indexes. I think volatility is going to be its own thing. On Tuesday.
More volatility, right? Like, XIV is turning up, the market must be recovering.
Yeah, exactly. I just think that's more likely to come from guys trying to add leverage or deleverage just their volatility plays, that it doesn't necessarily connect to what they're trying to do with index swing trades and all that. Whereas under normal conditions, I think that happens a lot because there's a strong correlation now in normal times between volatility and the broad market. But in this one, I think it's going to be its own asset class And I would not assume that that relationship remains true on this most unusual of election days in the history of America.
Yeah.
Or at least back until the election of Lincoln and Buchanan and all those fucking Civil War. Yeah. That's my sense there. Well, one thing that I notice here that actually is kind of cool is the 3 sessions you've mapped out are conceptually the same idea as we see in the chain trading, in that you have an unambiguous move in session 1 sets up either an owl or a P1F in the second one, the green section, as it either adds on to the first move, pocket, or it becomes a reversal of the unambiguous move because those guys made their money, in which case it becomes an owl. So the standard approach there of, I think it's hybrid frog in session blue to a pair trade in terms of strategy between it's either an owl or it's a P1F. The least likely scenario is one in which neither the owl nor the P1F works, and that it just immediately goes to the new probable price and becomes sideways quiet channel. That's actually okay if that's the worst thing that happens, because then you have a set of micro losses at worst.
Yeah.
So that's how I would. That's my insight from that sketch there.
Cool. That helps. So, quick question then. For the U.S. session 2, would you stick with the broader ETFs like we've talked about, or would you be looking to the individual stocks?
Yeah, I think I would stay with the broader ones, with the exception of maybe the financials. I think there are going to be some large banks that are going to have been more or less well postured. See, there's some, all those banks are now competing against each other to see who made the best call on how to hedge their own trading accounts. And, who did the best job of acquiring treasuries in this downward swing? Who's going to be best postured to sell that on the flight to quality? Who picked the domestic sectors right? Did they guess right on healthcare, or did they guess wrong on energy? All that. So I think there's a real chance now that the logic chain that takes you from the S&P to XLF for financials to FAS or FAZ as a target, and I would suggest you add that to your green target, may actually get you to and I would look at like American Express, JP Morgan, and Goldman Sachs. One of those 3 did better than the other 2 in getting positioned correctly. And so I think one of those is likely to move in a large directional way. As the insiders quickly move to adjust their own personal hedges, because they know what the order book looks like. They know what the inside posture of the bank was, and if they see their personal financial legacy at risk, they're going to be buying and selling their own shares in a big way. So I think there's a real likelihood for finance to be a big moving sector there too. And that may, indirectly also tie to their currency trading as well. So if you see big moves in the currencies, then banks are such a big part of that too, that they're likely to, there are two movers or 2 motivations for bank stocks to trade a lot too. So I would add the XLF logic chain that takes you to FAS or FAZ for the triple leveraged one. And then I would look at Morgan, Goldman Sachs, and American Express. American Express kind of representing the retail banker in the middle, and then the other one is kind of a pair trade between JP Morgan or Goldman Sachs, whichever one is moving bigger in their particular direction. I would be really inclined to hit them.
Okay, cool. That makes sense. We'll win this. And also in light of not changing too much, right? Because we
Yeah.
want to be familiar with the technique.
Yeah.
And be surprised and deer in the headlights if something outsized happens, right?
Yep.
So in general, we're trying to keep everything the same. I think what you said so far with regards to earlier about the volatility, using sort of like figure on a third bigger from normal
Yep.
frog boxes.
Yep.
Actually, that kind of fits in well with what Sonal's been doing with 1.5 frog boxes.
Yeah,
So
that's where. Yeah, and I've noticed that her she's been a lot calmer in the trades as they unfold, because I think that she recognizes there's less riding on each and every trade, so she can stick around a little bit longer, and so she's able to ride the primary trend a little better. Noise isn't taking her out, so, and she's able to take the re-entries um, more smoothly. So I think that just reinforces that point.
yeah, I think that's fair. With regards to scaling in and out of positions, I know that the way you tend to look at it is either scale in and then all out, or scale or all in and then scale out, right?
Yeah.
But what I'm kind of thinking about is, and I know that I'm going to be tempted to do this when and if there are large moves. My temptation always is to try to get a couple on early. And it tends to be earlier than the 2R target, admittedly.
Yep, that's what I do as well.
And then what's going to happen, though, is I'm going to freak out a little bit when I get sudden success. And then I'll often close the trade. And so what I've been contemplating is, if I do that, then closing down one of them when I just can't take it anymore and I need to strike, but leave, let's say, okay, I took the first position, it works, and I managed to ratchet a stop up and then take a second position so that I'm no bigger than 1R across the two.
Yep.
Then I get sudden success, take one of the positions off, and then say, okay, cool, and then try to be, follow the usual management plan for the remaining position, and even see if you get it back on for some reason, right?
Yeah, I think what I would do on that is, what do you have a sense of what your span of control is for simultaneous positions and bullets? 4 and 4. I would say I would go with 3 and 3.
Okay.
And that way, just try to really get it right. The reason you can have 4 on a normal day is we have a certain expectation about how many of these ideas actually follow through, and when that number is less than 100%, if it's half, then you need four tries, so that 2 of the 4, you don't know which 2, can come online and really start making the move, and the other 2 fall off, and then you can reposition the bullets from the slow movers to the fast movers, and you end up with 2 and 2. Well, the hypothesis we're working with here is that this is going to be a day in which it's going to be larger ranges and more trending directionality. So the margin of error that you need is going to be smaller, because each one has a greater probability of being a move. So by reducing your span of control to 3, you are removing some of the stress. In your mind, you'll say it really now becomes important to trade the fewer targets better, so you're not going to be scattering around trying to find things that are moving fast at a peak of, when the popcorn's popping, you're only watching 1 or 2 targets instead of trying to watch 4 each. And then if each of you has only 3, it may be that on your time frame it's not happening, and then you can come support the other person with some. You can dial in on the one that's working better, and that's the way I would trade it if you were working on different time frames. Say, hey, it's not so much here, but she's got a lot of. It's really working on the 10 minutes if that's the one she's going to do. Hey, let's get to our span of control of 4, but really concentrate on the 10 minutes. So you don't have a position one way or the other about which time frame ought to be working better. So each one is trying your own time frame. But then if it starts working, then shift to when the fish are running. when and where the fish are running. And then, because you haven't necessarily rehearsed that before, reducing your span of control a little bit will keep you some emotional reserve in order to trade longer during a day in which we think there's going to be more opportunities over a longer period. That way you're pacing yourself with how much of your attention you're spending at any one moment.
That's cool. I hadn't thought about that. It's a nice idea because someone often says, he's often trying to work out which time frame is working today.
Which time frame is giving the signal.
Yeah.
That's what I look for.
Yeah, and then later in the day, you normally you start small and then work up to big in a way. But sometimes you're like, oh, it was just really clean on the 10 minutes. And my concern in a way is that that session one, the overnight session specifically with currencies and stuff, is probably going to need a wider berth.
Yep.
Probably focusing on tens or something like that on the overnight stuff. But yeah, I like the idea of kind of swapping between the two of us and trying to work out what's doing what, and that way we kind of, in a way, don't miss out either.
Yeah.
Necessarily.
Yeah.
The other concern, of course, is that you're on a short time frame and you just get so dialed in to the short-term trading.
Yeah, and you just get burned out early on that. It's possible.
Yeah. Yeah. Okay, cool.
I'm just thinking about the striking, Ken. So if there is to be a directional move, and I'm going back to my memory of some of the currency trading I've done in the past, it's unusual for price to hug the Z3 line for time. And so that challenges my recent tendency now of striking at an excursion beyond Z3.
Yeah. As long as you're using a Z2, sort of as you're working, and that also is kind of, I hate to give you a new idea to test in the middle of this thing, but hanging a half a frog box off the RL10 as your trail instead of off of the price per se.
Yeah,
because you can, on the other hand, I'm never upset if you got that one bar spike excursion beyond Z3 and you say, you know what, that's the gift. And let that, and put a half a frog box on that or something.
In that circumstance, re-entry on a real trending day, if we're waiting for an RLXDC, return back to the Dragon, having studied the Brexit price action, that return to the Dragon didn't really happen until the following day. And so I wonder if we would just redefine what that re-entry would be.
Yes, I would look at I would look at if you have money in the position, or that target has made money for you, I would look at the RL10 crossing the baby dragon instead of the big dragon, because that is a very smooth. That's the first, like if the price and the 10 don't even go back to the dragon and just start taking off again, you'll see the RL10 reverses and goes higher. And if it's north of the baby dragon already, that is essentially an RLXD reentry. Only here's a case where it didn't even come back to the dragon.
Yeah, okay.
It was so strong that the new buyers came in and overwhelmed the few people who were trying to get short the strongest sector. And so to me, the RL10 is a good proxy of price. The RL4 on the RL10 is that smooth baby dragon. I would take that as the dragon RLXD right there, and just go for it.
Cool. Thank you.
Yeah, because that's one of those things, and I know exactly what someone's getting at is when you get a nice move in your direction, you strike at Z3 or maybe above Z3 because it seems like it's just this extended move, and you feel really good about that for a few minutes.
Yep.
And then price just carries on going, and you feel like there's no other way to get back into that trade, and because you almost don't really get back in on a move, I would say higher than that Z3 entry, because that feels like a real extreme. Now I just struck there because it was so far away, and it's really hard to get back in there, and then you kind of watch it go away from you, right?
Well,
Yeah, and so you get that kind of spiky move right there, right?
Yeah.
And you saw it was hugging this all the way up, and then the Z3 really expands, and this thing is past Z3, and the dragon might have been down here like this.
Yeah.
And then you'll see the baby dragon. Draw him as purple. Is going to be way up in here like that. I'm going to draw him just as a single line.
Okay.
And then you start seeing this crap. And the RL10 will be right along with this thing. It'll be like this.
Yeah.
So I think in many ways it just, if you hang half a frog box off of there and say, that's the maximum I'm willing to give back. Then when the RL10 comes back, it might do this and starts to curl. And you have this whole move all the way down to the dragon. It never even occurs.
Yeah.
What you'll see in this kind of case is that the baby dragon will roll over pretty quickly. And if this thing really were to sell off, that thing's just the baby dragon quickly gets back on board with price in a hurry. But now you get this divergence here. And so you get like an RLXBD. The RL10 crosses the baby dragon.
Right.
Right. And then the regular dragon just smooths out a little bit and then starts to, what you'll notice is this probably happens in here, that the slope of the dragon itself never even rolled over. It stopped going up quite so much and then just got sideways and then resumes. And the RL10 never got down to it to cross it and then give you a comfortable pocket reentry. What we really like to see is price peaked out and then we struck here and this thing gave us an orderly move and then came back and crossed, and now we have a clear pocket, and the price hump was over here and the highest high was over here, so we're able to get in here and we feel like we got this much price improvement, and so that makes us feel good and professional. But when it only does this, now suddenly we find ourselves seeing price get all the way back past this. We say, oh shit, I didn't get any price improvement. I'm now missing all of this, all of that, which in retrospect looks like easy gains. So you might just take this idea. This was the highest high, and then have as a, not later than reentry. If you've got, if the first leg made you 2R in hand, you say, hey, that's my not later than reentry. Size 1, And hopefully you, on this runaway move, it would be nice to have 2 bullets in that position. Then you cash all out, and then you're only putting 1 back on. You're trading it in the usual way. Psychologically, that's easier. So this thing comes down, and you say, you know what, 1, 2, 3, I decided to strike. Awesome. And now the RL10 has rolled over. And then this is sort of your not later than. This is sort of a small P pocket in here. And then what I would look for is just you accelerate your, instead of using the dragon, use the baby dragon.
Yeah, okay. Yeah, that's cool.
And now
that's what you mean.
This is sort of the RLX BD. And then this is the midpoint of that pocket.
Yeah, cool.
And the amount of time between this and this, that could be 1 to 3 bars on the 1 minute, 1 to 3 minutes.
Yeah.
And actually, the sooner this occurs, the stronger that move is, because it never even got down to the dragon
Right.
which is way down, by now the dragon is way down here. It never even got all the way down here. It reversed and crossed the baby dragon and then made an all-time high. So this is really your discretionary time from the time so this is the time in here from the time you struck till the time the baby dragon crossover occurs. That's your recovery time.
Okay.
Or your reset emotionally.
Yeah.
Enjoy the energy that came out of, hey, I got this. And it went lower after I got out, so I'm already feeling smart. It started to get flat, and then this is your not earlier than, and then that's your not later than. And then by this time, from the moment you sold to the not later than time you re-entered, that's kind of your, this is the emotional challenge of getting back to the zero state. Difficult emotionally.
But maybe get up and walk away for a minute.
Yeah, one quick reset, and then just say, look, if this thing really works and gets long, I'm gonna get 2 positions on it anyway. And in the worst case, you get 1 position here on the not later than entry, and then this thing keeps going, and then it moves half a frog box that way, and you put the second one on, ready to punch out of everything, but you're not going to lose money on that trade. And then if it works, you say, oh, okay, I was able to get back in. Now what happens is, it's a second leg up where it's going to hug that Z3 line, and then I'm going to get another one of these emotional one-moment spikes. So maybe there's 2 of those in there. This little structure right here with using the baby dragon and the not later than entry gives you a professional feeling way to do this without burning up your emotional energy. If that's too much, then just say, you know what, today, to be the trader I am and to be able to maintain my energy for the next 18 hours, I'm just going to strike and reset. I'm not going to look at it for 10 minutes, and I'm just going to get my shit together and plan for the long haul. I'm going to go see where am I in that 18-hour excursion and what's the next best thing to do. I'm just going to say it costs too much energy to sweat the small stuff. So you got to take one of those 2 positions in your mind.
Yeah.
And then if you're in one of those where you struck on the 1 minute, if that thing's going to keep working, it's going to look good on the 10 minute, and it won't be an emotionally challenging decision.
Right.
So use your multiple time frames to help you offset some of the emotional cost of this emotionally challenging situation here. That's what I would say.
Cool.
I guess just one quick question on state management, Ken, if I may. So there's 2 of us here.
Say it again.
And there's 2 of us here. We'll be trading 6 targets between us.
Yep.
In terms of resetting, keeping each other's energy up, depending on how we're doing, have you got any tips on how we can help each other reset, rebalance, check in with each other without interfering with, say, a trade that's in play?
Here's what I want you to do. I want you to think of this as a 12-round heavyweight boxing match, and I want you to remember what it's like. Go watch some tapes of good cornermen working their fighter in the 1 minute rest. The guy just went out there 3 minutes with the champ. He's getting his brains beat out. He gets to sit down for 1 minute, and in that 1 minute, they put him on a stool, and you got somebody massaging his neck and head, putting an ice pack on the back of his neck to cool down his body, cool water on his face to refresh that feeling, and a guy looking him in the eye and giving him two things he wants him to do in this next round. Here's what you got to do, and he gets his emotional energy back to regulated aggression, because if the other guy's kicking his ass, you don't want to, hey, you're getting your ass kicked here. No, that ain't helping. Here's what you got to do to get back on point. Remember our keys. Time, will, pattern, money. Trust your pattern. Manage your risk. Strike when it feels right, and then we'll total it up later. Those kinds of things, you got to get your between round corner man speech right. Whatever you two need to say to each other or do for each other in that 1 minute between trades. That's what I would say.
Cool.
You got to have a little. That's your. I would make a sketch of that. Sitting in the corner. What do you say? What do you need to hear when you're in that mode? And then you tell your coach what you need to hear. And then your coach tells you that. That's and so for me, I'll give you the example for soccer. Before each match and at halftime and after the match, I remind the girls of the big five. I said, what matters? And they'd say, play hard, have fun, support the team, love the game, respect the other team and ref. And then we grade ourselves on how we're doing. And then that's a way to offload all the stress of the first half. Maybe we're getting our asses kicked. I don't know. Maybe we're enthusiastic because we're winning so well. This gets us back to our long-term zero state and to concentrate on just the things that matter the most. And then all of the energy and emotions of all the other crap that happened just sort of just disappears. And it allows us to reset. So there's two different models there from athletic performance about how to reset to the zero state. So you got to find the things that each of you needs, the key words. When you're trading at your best, what are the top 5 adjectives that characterize you when you're trading at your best? Write those down. Write down what it means to you and how good that feels. And then those keywords you turn into that focusing script. Remember, we got to do these 3 things. This, that, and the other thing. 3 keywords, and then you're reset.
Cool.
Awesome. Thank you.
Yeah, we'll do that. That makes a lot of sense. Thanks, man. All right, we've taken up a lot of your time already. Thank you for your...
Yeah, you got work to do.
Did you cover the integrated chain trading?
Oh.
Yep. Thank you, ma'am. I knew you'd be there for me. Yeah, let's see. So this is kind of like the the rehearsal of what matters. Let's see if I can find the. I thought I had it in here. I just installed a new Adobe Acrobat reader, and I haven't activated the. So I got to. It tried to open it with the new thing. Let's see. Open with. Acrobat. There we go. All right. So the primary template is this one. See if I can get a nice pointer in here. I guess it will. And color of the pen, blue. All right, so whatever that stalking moment is, and whatever your price point is, then your hybrid frog box is hung, and then it stays in place until you get either a long signal or a short signal with the initial stop trailing it. And the size of that leg, you don't know. We have ways to estimate that, but you get to the point where you get the unambiguous move. Unambiguous move is in place. And when a P1 occurs, by definition, you saw an unambiguous move. Because it's somewhere in here, you can't get a P1 until the price, the 10, and the RL30 have all left the river. Because for the RLCO to occur outside the river, the 30 had to leave the river, right? And when the 30 leaves the river, that is the beginning of trending behavior. The definition of beginning a trending behavior is when the 30 leaves the river. So by definition, when you see a P1, you already have the unambiguous move criteria has been met. So leg 1 is unambiguous move. Step 2 for the owl is a P1 outside the river is formed. The next critical state for the owl is the RL10 must cross the dragon for step 3. Step 4 is the dragon is curled up. Step 5, the 30 has rolled up, and then I'm into the owl. Now, if this thing, and so now the P1F trade, the preferred trade, by the way, if this thing never even gets to the dragon and rolls over, this moment here is the not later than entry. So I can get short inside this pocket simply on the basis that it failed, that the RL10 failed to cross the dragon, or it failed to get to the Bollinger Band mean. So let's remember that, you know, if we're stalking and whatever, and we get a P1 entry here, the first place, what defines this as success is when the RL10, which is the real price, gets to the Bollinger Band mean. Then we have a P2. P2 is achieved when RL10 crosses the Bollinger Band mean. Any failure short of that is a resumption of the primary trend which caused the unambiguous move to occur. And the size of this move is the size of the next move down. So we love the P1F. A P1F is simply a pocket entry on a continuation of the primary trend, and 2/3 of the traders and 3/4 of the buy and holders all believe strongly in the downward move. And they see this little blip up as a way to get short again at a better price improvement. The same angst that you were describing before about when to re-enter, that's the same angst of all these guys that want to get back in before it crosses the red line. That's why this thing fails before it ever gets to the Bollinger Band mean or even to the dragon. If it fails at the dragon, that means it's failing at Z-1. You know, if this is the Bollinger Band mean, that's Z0. The river is this. So if it fails short at the edge of the river, Christ, it's failing at Z-1. Of course that next move down is going to be huge. Are you with me?
Yeah.
So, step 1, unambiguous move. Step 2, P1F. Step 3, price crosses the RL10 crosses the dragon. Awesome. Dragon has rolled up. That's 4. 5, the 30 has rolled up shortly thereafter. And now step 6, you just bought the owl. And now we have the owl making a move. I'd love to see him get all the way back up into here. That would be great. But at some point, he stops. And now you get a P1 this way. P1. And now it's the same logic as here. And now this green line here, that's your not later than entry on the emerging dragon. You will recognize that that's the little battle drill that we just talked our way through about re-entering those runaway moves that went up to Z3. And I said, in that case, if it was such a good move and it's such a distance to the dragon, be prepared to use the baby dragon instead of the mama dragon. And if that makes you nervous, put half a position on. Just put it on. And then if it gets through the not later than entry, put the second half on, and now you get the average price of between the not later than entry and where it turned, and you had it cross the baby dragon. You put half here and half here. Now this thing has made a new high and is off and running, and you get the average price, which is the perfect pocket entry. So don't make it harder than it is. You know, if you need to execute this thing comfortably, then put half on here. And if it fails, you're only losing on half. But if it works, you'll get that second position on pretty quick, and then you'll get that whole thing to no lose, and now your average price was between those 2 points, and you'll take that all day. Okay?
Yeah. Yeah, cool. That makes sense. I kind of like that, putting on half and then half again.
And that way you just say, screw it, I'm always going to be wrong, so let me just get the average. All I want is the average. All I ever want is the average price in here anyway, because it's better than if by waiting, and I don't have to sweat front running, which feels risky. If I could just find a reliable way to get the average price, well, here's how you do it. Across the dragon, or the baby dragon, is still going up, and I got to put it on before it departs the not later than. That doesn't take very long. So if you just put half and half, mathematically you'll get the average one anyway. So just do that. So now we'll go back to the P1F leg. We either get it either happened right away or it got through the dragon, and then the owl failed. The owl didn't go make that big move. It just rolled over. So we learned to cap our loss at the RLXD in the usual way. And now somewhere between the RLXD and the not later than entry, we have this pocket entry. Hey, use the same technique. Put on a half, stop and reverse. Put on the second half when it breaks through the collapsing dragon. You end up getting the pocket entry. And you can live with that because especially now, you already have the unambiguous move documented. You have an owl that tried and failed, and now all those guys are going to be convinced it's going the other way. So now when it finally hits the collapsing dragon, this is a big move. That's the one you want. And you got a great entry on it. Even if your entry was the collapsing dragon, it's a great entry. But you can probably get the pocket entry now. And then it'll go down as far as it does, and now he's just lather, rinse, repeat. For it to go 3 legs, this would be 1 leg, 2 leg, 3 legs. Normally, I like to do, I see 1, I plan for 2, and I hope for 3. If the owl didn't work on this in this one, then the probability that the owl works in here is better, because now you really have an exhaustion. You have this huge move down, and now everybody says, oh, if I just play a 50% retracement, it's going to be good. So the second owl will work fine on there. And then at some point, each of these directional moves just get exhausted, and so you have these kinds of scenarios in the day. You had a big move down, a second move down, or maybe a third one, and then that finally collapses into a sideways quiet channel, and you had a move that looks like this. Big down, and then half the bowl is formed. And now it's in sideways quiet channel. That's where you look up at the 10-minute time frame and see what you have over there. Or it was a big move down, and then better, you get the owl, and you get a second leg up on the owl, and then that thing collapses into a sideways quiet channel. And then you can play pattern 5. Or if those sideways quiet channels continue to collapse to the point where they become Z3s, now the breakout is even better. And then it's a Z3 pinch breakout. And guess what that is? That's nothing more than this. You're back into here. And now you get another whole cycle of unambiguous move. And then either an owl or P1F happening. So you get this virtuous cycle. The worst case of all, the worst possible case is you get the hybrid frog move, whether you take it or not, and then the owl doesn't quite work, and the P1 doesn't quite work, and it just mucks around in here, and it becomes a sideways quiet channel, which may become a Z3P. And so you might get 4 micro losses in here, in which, and the only way that happens is, wow, we had this one huge move, and look what happened. It magically got to exactly the fair value, and there was never any secondary move at all. Low probability of occurrence, especially on Tuesday and Wednesday. The chances that the whole world completely recalculates everything to their new integrated fair value and has no more trading momentum, yeah, I suppose that could happen. Low probability. And if it does,
Yeah.
if it does, it's like a bunch of options trades that expired and you never got the big butterfly move, and you say, hey, that's just the price of setting up the low risk idea. So low risk ideas don't always work, and there's a price you got to put on for them. So don't be surprised if that happens. You already wrote that money off. You can't get to feel extra bad about it. You picked a favorable reward to risk and probability profile that said, I am prepared to take a professional loss on these. I'm not going to get emotional about it. And then when it happens 4 times in a row, you say, oh no, I've decided to become emotional about it and let that memory of that linger to the point where I can't take the next trade in the usual way. If that happens, then that simply means that you overestimated the size of the risk that you thought you could professionally manage. So that's just information. And you say, thanks, Chimp, for helping reveal to me what my true emotional framework looks like. And then adjust your position size to the point where you can take 4 micro losses and still take the 5th trade without sweating it. In our case, we built that into the strategy by deciding to use the wider long-term frog box rather than the closer one. So our position size is essentially reduced by 1/3, and we have more room to wiggle around. So those trades will be easier to manage professionally because we're already using a wider definition of R. Not so much that it violates the skills that we built up, but it certainly makes the emotions easier to manage, easier to take 4 micro losses because the micro loss will be smaller. And we've said we're going to reduce the span of control from 4 to 3 so that we can go more rounds with the champ. It's like you're taking shorter rounds. You're reducing the amount of damage you can take if it doesn't go according to plan. So now you can endure this longer. So we've accounted for the emotional state in 2 different ways, but without changing the essential nature of how we're going to trade. So, and then you're going to build the between rounds flashcard. I'd like to see you post that before Tuesday. Just do a quick sketch and tell us what the 3 keywords are. What's your corner man going to say to you? What is your between rounds ritual going to be? It has to be less than a minute because when that bell rings, that other guy's coming. He's coming at you. So you got 1 minute, a 1 minute reset drill. Fair enough?
Yeah, definitely.
Okay, we will do it. It's a must. We'll be doing this.
It's very good.
Think about the example Charles did with his chimp and handler sketch or his dialogue cartoon.
That's awesome.
To help him work through the routine. What is the script that always comes up? How do I routinely handle it so I can get... And then it's not over until you say it's over. The script is over when you are back in the emotional 0 state ready to trade. You don't record how you're feeling and where and it leaves a bitter taste in your mouth. Well, then you did by using that as the end point of the script was solidify that bitter taste in your mouth. So you can't do that until you finish the in-the-moment psychological processing, which says, and now I'm back to the 0 state in the usual way. I'm a professional getting ready for the next round. Then you can type it. Once you start typing it and posting it in the room, in your mind, that previous session is already over. And if it didn't end on a 0 state in your head, then you left the fight too soon. You got in your mind, before you type anything or post anything else emotionally, just you and your mirror, you got to be at the 0 state, ready to trade. If you had a mirror on your desk and you looked into that mirror and you see your game face, then you're ready to trade. Try that. For me, the picture of that sketch of Sun Wukong, the Monkey King, where he's got that golden circle on his head and he's got that snarly veteran warrior face, that dude's ready to fight. That's what I'm like. That's what my 0 state looks like. That doesn't mean that I'm perfectly passive Buddha under the tree, dude, I'm ready for a fight. And maybe I need to have said it that way before. We're not trying to eliminate the emotions. We're trying to create the emotional state in which there are no negatives in my emotional state. I am ready to go forward and win. So that's different than being emotion-free. It's actually kind of the opposite. I'm leaning forward. I'm feeling good and aggressive and ready to take my shot. Not worried about taking a punch. I can take a punch. My defense and my scaffolding will prevent me from taking his best punch. I don't want to let him take his best punch on me because his best punch is a good one. So I got to protect myself with scaffolding and structure and trade framing and all that stuff. So that's what I want to say about your zero state and the flashcard imagery. And what are the last three things that your coach says to you before he pushes you back out there in the middle of the ring? And what does your war face look like? What does your game face look like? Then you're ready. And then you can say, I'm set. You know, in the Army, when we talk about moving into positions and that we plan and then we prepare and then we're ready to execute, we say all of that in one word. Hey, Bravo Company is set. When we say we are set, that means nothing more needs to be done for us to be ready to go the way we've been trained to go. I am set. You know,
okay.
it's all the prep is done, and now we have clicked on, Transformer powers activate, Euro Twins activate, and you're just waiting for the trigger. So that, to me, is what you got to do in between those trades and what you can do for each other as you go in and out of phase with emotional content and emotional batteries. So let me know how that goes.
Wow. Yeah, I certainly will.
Thank you, Ken.
Yeah, hey, thanks for all your time. And, it's given us plenty to be fully prepared for, I think.
Yeah. Okay, guys. Go get them.
Great.
Thank you.
Thanks, Ken. Have a great weekend.
See you guys. Go get them.
See ya.
See
Bye.
ya.
Hey, I got to tell you, I'm reading this book it's called The Tiger, and it talks about these Russians that are hunting the largest tigers in the world, the Siberian tigers over on the Amur Mountains. They're actually so big that they think they might even be a subspecies of tigers that goes back to the saber-toothed tigers. And they're talking about these guys in the 30s and 40s that are hunting these things by hand. They use dogs to chase them in the wintertime so they get tired. And then the tiger is too tired to run away, so he turns and fights. And these guys come up with tree branches with forked sticks and blankets, and they throw it on top of the tiger. And then this badass goes and jumps on his back, grabs his ears to control his head, and puts the live tiger in a bag, and then ties the bag.
A bag?
Yeah. Yeah. It's like a big blanket, and they roll them up like a burrito. and then with ropes and all that to snug him down. But I'm just picturing the guy, he's jumping on, grabbing the tiger by the ears. And he says, if you control the ears, you control the teeth. And I just keep thinking back in my head to, when did that idea first occur to him, and why did he think that was a good idea? It's something to try. Because somebody had to try that out and say, hey, let's give this a try. Let's see how that works. So when I say go get him, Tiger, that's what I'm thinking. Go get him.
Okay.
Go get that
Gives me a
tiger.
different.
All right, guys.
Cool.
Take care.
Thank you, Ken.
See you, Ken.
Have a good weekend.
Yep. Bye-bye.
Yes, bye.